Hey everyone, welcome back to Corporate Decoder. Today AMC just filed an 8K detailing a massive new debt issuance, and I'm seeing a clear sign of Intel's strategy shift. Quick note, this is not financial advice, just my take on public filings for educational purposes. Intel is making a significant move to fund its future. But the sheer scale of this debt raises some important questions about their long-term financial health. So Intel Corporation, a titan in the semiconductor world, has just announced a huge bond offering. They are raising a grand total of $6.5 billion by issuing several different senior notes. Let's break down what this means. They've issued notes maturing in 2031, 2033, 2036, 2056, and even as far out as 2066. The amounts range from $500 million to $2.25 billion for each series. The interest rates on these notes vary too, starting at 4.65% for the shortest term and going up to 6.20% for the longest. What is really interesting here is the total amount raised, a staggering $6.5 billion. After all the fees and discounts, Intel expects to pocket around $6.47 billion. This is a massive injection of cash, and it is clear Intel is leaning heavily on debt financing to fuel its ambitious plans. We saw a similar strategy from companies like Clorox when they needed to fund large projects. Though Intel's scale here is truly remarkable. Now, where is all this money going to be used? While this specific filing doesn't detail the exact use of funds, Intel has been very vocal about its massive investments in new chip manufacturing facilities and advanced technologies. This debt issuance is likely a crucial piece of that puzzle, allowing them to build out their foundry business and compete more aggressively in the advanced semiconductor market. This move is reminiscent of how companies like AMD strategically use debt to fund their own capital expenditures during periods of intense technological change. These notes are being issued under a framework of indentures, which are essentially contracts between Intel and the bondholders, outlining the terms and conditions of the debt. Companies like Intel, with their enormous capital needs, often use complex indenture structures to manage their financing effectively. Think of it like a company taking out multiple mortgages for different parts of a huge construction project. The underwriters for this deal include some of the biggest names in investment banking Citigroup, JP Morgan, Barclays, BofA Securities, and Deutsche Bank. These firms are essentially helping Intel sell these bonds to investors in the market. Having such a strong syndicate suggests a high level of confidence from the financial institutions themselves in Intel's ability to repay this debt. Looking at the specific notes, the 4.650% senior notes due 2031 represent a portion of the total debt. This is a sizable chunk, and the interest rate is fixed, meaning Intel knows exactly how much it will pay in interest each year for this portion of the debt. Comparing this to the current market for tech companies, this rate seems competitive, but it is still a significant cost of capital. Then we have the 5.300% senior notes due 2036. This is a longer maturity and a slightly higher interest rate, reflecting the increased risk associated with lending money for a longer period. When companies issue debt across various maturities, they are trying to balance their borrowing costs with their expected cash flow timelines. This strategy allows them to manage their debt profile effectively. The 6.125% senior notes due 2056 are for a much longer term, and as expected, they come with a higher interest rate. Issuing debt that far out 30 years into the future is a significant commitment. It signals that Intel is planning for very long term growth and expects to be generating substantial revenue and profits for decades to come to service this obligation. This is a bet on their future competitiveness. Finally, the 6.200% senior notes due 2066 represent the longest maturity in this offering. The interest rate here is the highest, which is logical given the extended timeline. This signifies a deep reliance on future earnings to cover this debt. It is a strategy that can work if the company's long-term growth projections are accurate, but it also carries substantial risk if those projections fall short. Legal firms like Gibson, Dunn, and Crutcher are involved in providing opinions on the legality and validity of these debt issuances. This is standard practice for large corporate financings, ensuring that all the legal ducks are in a row. The exhibits list all the supporting documentation for this debt issuance, including the underwriting agreement and the various indentures. These documents outline the precise terms of the debt, including covenants, interest payment schedules, and any restrictions placed on Intel. What does this all mean for Intel? This massive debt issuance signals a commitment to aggressive expansion, particularly in areas like chip manufacturing. It is a clear signal that Intel is willing to take on significant financial leverage to fund its long-term strategic goals. However, it also brings an increased financial burden in terms of interest payments, which will need to be managed carefully through consistent revenue and profit generation. This is a high-stakes play, and its success will hinge on Intel's ability to execute its ambitious roadmap and maintain its competitive edge in the rapidly evolving semiconductor industry. The risk I am watching is whether Intel can generate enough free cash flow to service this substantial debt load while still investing in innovation. My biggest concern is the long-term impact of such a large debt burden on their financial flexibility during economic downturns. What I'm actually looking for is how this new capacity translates into market share gains and increased profitability in the coming years. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like this video and subscribe for more, plus our Discord is in the description.